The bond market is at a turning point, and the next moves could set the tone for weeks ahead. Yields are quietly building a solid bottom, flashing strong technical signals that suggest the rate rally is about to resume. Meanwhile, TLT is on the edge of a major reversal, with just one more confirmation needed before downside momentum kicks in. In today's TLT and Bond Market Weekly Update, we'll analyze 10-year and 20-year yields. Are they primed for another breakout? TLT's bearish setup. Why a reversal could be imminent. Elliott Wave and Candlestick Analysis. The most probable path ahead. Key support and resistance levels to watch. The bond market is shifting fast. Let's break down the charts and track the next major move. This is the candle closure of today's yields on 2, 5, 10, 20, and 30-year yields. The most common thing here is that all of them are bullish. And particularly, I would like to say this about the long-term ones, like 10, 20, and 30-year. Yesterday's neutral candles, which we discussed in our daily, they were indeed bullish continuation ones, and today we clearly see it. So the daily candles today closed above the open of yesterday, and they have very good chances to look higher next week. Now let's have a look at the 10-year more closely. So this is the daily. We can see that daily broke through the 200 days moving average 2 days ago, and today it reconfirmed the break, also moving above the 8 days EMA. On the 3-day frame, it's a very strong bullish engulfing, that the frame that closed today. So it could be somewhat similar to this one that was formed in the middle of December, also bullish engulfing on the 3-day frame, and you see what kind of impact it had. So we would be looking for something similar right here, and the candle has a support at 50 periods moving average. Now the weekly closure. This is technically a bullish harami, and it requires a confirmation. So far it required the 50 and 100 weeks moving averages, and there is a good chance that we will see a confirmation next week. Speaking about the Elliott waves, so this is the 20-year government bond yield. What we are seeing here, and we discussed this earlier in our previous videos, that the yield potentially formed an impulsive way of the bottom. What it means that there is a very good chance that this wave will be repeated one way or the other upward, and this would be in either ABC formation, or at this point I'm looking at 1, 2, 3, 4, and 5. So potentially for a larger impulse, for an impulse of higher degree. That's the perspective, and if this hypothesis materializes, well, we could see a 5% 20-year rate be before the end of March. That would be an interesting development. Let's see how it impacts the markets. Now, in the opposite move, let's have a look at TLT. What we are seeing here is totally opposite. We are seeing bearish harami on Tuesday, which was confirmed on Wednesday, and uncertainty doji, which was reassured by this Friday's big bearish engulfing candle. And to make things worse, we have a freshly made MACD cross, bearish MACD cross. So this is a very good potential for a move lower. That would be a very strong support. If we look at the bigger frames, nothing special here on the 2-day frame. It's just a confirmation technically of the reversal on an inside down. And speaking about the weekly formed a strong, fairly strong bearish harami, which is if it is confirmed next week, we should see another leg down. And like a very ballpark estimate, TLT should hit 86, 85 level, approximately. Well, now let's move on to the Elliott waves. What we are seeing for Elliott waves, and we discussed this since the end of February, this particular one. So this wave has been corrective for the most part, and now it had a chance to form a bigger impulse for wave C, which is marked here in the blue color, alternative C. However, I would like to emphasize that this level here, and let me mark it, it's 89.68, just to be exact, 89.68. So if 89.68, so if TLT crosses this level, even 1 basis point, it will be a clear invalidation of this blue impulse and a reversal, technical reversal, even though we might see some bounce here, but the odds will be strong bearish on the Elliott wave chart, and we would be looking for this wave to be an impulse. Technically, if it makes one lower low, it would be an impulsive wave here, and I'm talking about this potential one. So this would be wave 1, then we might see a bounce, corrective bounce, then would be wave 3, 4, and 5, somewhere there. But at this point, it's difficult to even ballpark estimate the length of it. But first, we shall see a break below this level. This is a very critical one to watch on Monday, Tuesday particularly. Once broken, before hitting a new higher high, this will be a confirmation. Now let's have a look. I wanted to discuss also a bigger picture, but in general, it doesn't make sense. That makes a lot of sense right now, before we know for sure which path will be taken here, either blue or red one. So the blue is losing momentum, the red one is gaining momentum, and it has much more probability right now, particularly if we consider the candles and technical signals. And I'm talking about MACD. Now let's move on to the bigger chart. This is a very interesting one, and we've been tracking it since December 2022. So we once made it, and so far it's been followed. I'd like to emphasize that this is a quarterly chart, so every candle is 3 months, and it's very long term. So it covers the period from 1913 to 2061 approximately. And what I would like to say here, if we zoom in a little bit, what we can see here is that this is a quarterly candles, right? The previous quarter, Q4 of 2024, was a bullish engulfing candle. And so far, this Q1 candle, which is closing in 23 days and 21 hours, it's not a bearish candle. Let's see how it closes. And particularly if we look at the smaller frames and the candles, we might see a very smooth move upwards here. Well, that's the perspective, and this is what we are looking at, the bigger momentum. So, to summarize, yields are strengthening their bullish foundation, while TLT inches closer to a critical breakdown. If the last confirmation aligns, we could see a powerful reversal in bonds and renewed surge in rates. We'll continue tracking every key level and formation in real time. Stay ahead with premium daily insights at investingangles.com. Our stock and crypto package is just $10, covering major stocks, Bitcoin, and exclusive Discord access. Subscribe to our free reader plan for weekly insights and more. Follow us on YouTube, Twitter, Telegram, and Reddit for expert technical analysis and real-time market updates. If you found this analysis helpful, please like, share, and subscribe so you never miss the next critical move in bonds and rates. Thank you, and as usual, happy trading.